Crypto Comeback 2025, the Digital Gold Rush 2.0. After a tumultuous few years of market correction, regulatory turbulence, and fading retail interest, cryptocurrencies are surging back into the spotlight in 2025. Bitcoin, once dismissed as a speculative bubble, has regained momentum, climbing steadily beyond its previous all-time highs. This resurgence isn't just about price. It's a reflection of deeper structural changes in how cryptocurrencies are perceived and integrated into mainstream finance. The growing recognition of Bitcoin as digital gold has brought institutional investors back in droves. Major asset management firms are now packaging crypto assets into diversified portfolios, while pension funds and sovereign wealth entities cautiously allocate capital to this volatile but high-potential space. The token economy, once rife with meme coins and scams, is being reshaped into a more regulated, mature ecosystem. Meanwhile, Ethereum has successfully transitioned into its most scalable and energy-efficient form yet, enabling a new era of decentralized finance. Layer 2 networks like Optimism and ZK Sync have made microtransactions and smart contract execution faster and cheaper than ever. This evolution has enabled the rise of everyday DeFi, decentralized applications for saving, borrowing, insuring, and even earning interest on tokenized salaries. These apps now cater not only to crypto-native users, but also to small businesses and underserved populations in emerging markets. In Argentina, Nigeria, and Southeast Asia, stablecoins have become a lifeline, outpacing traditional currencies in daily usage. They offer fast, low-cost transfers across borders, immune to local inflation. The global economic instability of recent years has only heightened the appeal of such digital dollar substitutes. In parallel, governments are racing to catch up. Central bank digital currencies, CBDCs, are being deployed across more than 30 countries with mixed reception. While CBDCs promise efficiency, they also raise significant privacy concerns. People are beginning to contrast the programmability and transparency of public blockchains with the surveillance potential of state-backed currencies. This has reignited debates around financial freedom, digital identity, and the right to transact anonymously. Privacy coins like Monero and newer ZK Snark-based tokens are gaining traction as users look for alternatives that preserve anonymity in an increasingly monitored digital landscape. Regulatory frameworks remain fragmented globally, but there's growing consensus on treating digital assets as a distinct financial class with tailored oversight. NFTs have evolved far beyond profile pictures and speculative collectibles. In 2025, they're now embedded in real-world use cases like intellectual property rights, digital passports, academic credentials, and virtual real estate. Artists and creators are leveraging NFTs not just for monetization, but for community engagement and royalty automation. Music albums, books, and even podcasts are now being minted as NFTs with built-in licenses and pay-per-use models. This direct-to-audience structure has dismantled traditional gatekeepers. At the same time, the metaverse, which saw waning interest during the crypto winter, has been reborn with more utility-driven environments. Instead of pure social or gaming experiences, we now see functional metaverses for education, telehealth, and remote work, all powered by blockchain infrastructure. Token-gated access, digital identity via wallets, and DAO-based governance are core elements of this new Web3 lifestyle. Cryptocurrencies in 2025 have transitioned from a fringe speculation to a foundational pillar in the evolving digital economy. The narratives have matured, the technologies have evolved, and the user base has diversified. While challenges persist, from regulatory crackdowns to energy debates, the global movement toward decentralized, transparent, and programmable money appears more inevitable than ever.